The economic survey was tabled in Parliament earlier today, a day ahead of the Union Budget. The survey, which presents the state of the economy in the current financial year, also gives hints of policy prescriptions in the budget. The survey was tabled by Finance Minister Nirmala Sitharaman. It projects that India's economy will grow at 9.2% in the current financial year and 8 to 8.5% in the next financial year. The projection is pretty conservative in comparison to other forecasts by various agencies, but it puts India's growth ahead of China this year as well as the forthcoming years. There are warnings as far as inflation is concerned, as crude oil is on the boil and threatens the recovery. Inflation is also up and could rise further. However, a big relief to the government is where the survey says that there's enough fiscal space to continue to ramp up capital spending, indicating that perhaps the budget, the 10th of the Modi government, could loosen the purse strings a little bit more. Joining me to discuss the economic survey and what to expect in the budget in a few hours from now is a stellar panel. Rahul Bajoria, MD and Chief India Economist at Barclays, Dr. Aurodeep Nandi, India Economist at Nomura, Indranil Pan, Chief Economist, Yes Bank. I'm going to begin by coming to you, Rahul, on the latest GDP projections. And the projections make it clear that we will see a slight decline in next year's growth. And if you look at the 3 years, FY21, the revised number is a contraction of 6.6%, FY22, 9.2% at this stage, and a projection of 8 to 8.5%. What does this tell the average man about how the Indian economy is growing?
Thanks, Siddharth. So I think the way to read this, series of numbers is basically that India did suffer a very large, shock in its activity, indicators in the pandemic year, which was fiscal year, 2021. And then, we have had, I would say, a reasonable recovery, which was also partly hampered by the fact that, we had the Delta wave, at the very beginning of the financial year. But, the recovery since then has been reasonably strong, and we are roughly at the same place where the economy was before the pandemic. So in that particular context, a projection of 8.5%, although we think it might be a tad optimistic, but still shows that, the economy is back on a path where the economic growth outlook remains reasonably resilient. India will be the fastest growing economy, even if the numbers are a tad on the lower side of that particular range. And we reckon that, this particular year will be the year when you really see, India's manufacturing activity improve. There are some tailwinds to be enjoyed. And from that standpoint, we expect these numbers to be broadly realized. And the message is one of resiliency and some hope, for the larger population, to take away from this particular projection.
Indranil, is 8 to 8.5% in line with your own projections? Are there headwinds, for example, oil, that could pose a challenge to these numbers? Your views on this?
Yeah, so 8 definitely is higher than our own numbers that we worked our budget estimates for. Our numbers are more closer to a 7.5%. Now, contextually, I think what needs to be placed on the table is the fact that given the advanced estimate is looking at a 9.2%, the second half of the current financial year is likely to be significantly softer than the first half, which clearly, yes, there are some base effects, which clearly also indicates that we are not sure about how the structural sort of positioning of the economy is in the current scenario as we try to get out of the pandemic, and we always keep talking about the K-shaped recovery. How it is supposed to be supporting a relatively high growth rate of 8.5%. So that possibly makes me a bit skeptical about the 8.5%. But having said that, I think the context is more in terms of how the budget numbers are placed, and to that extent, the nominal GDP growth will also be quite sort of important. And given that the economic survey talked about headwinds so far as inflation pressures and global commodity prices are concerned, my sense is that the overall inflation, especially with respect to the WPI, will be strong, which will provide sort of an upward bias to the nominal GDP, and that is likely to help the revenue numbers.